Good afternoon, and thank you for joining us for today's webinar, Leveraging the Unified Managed Account as a Catalyst for Growth, presented by Tegra118. I'm Christine Birmingham, Education Manager with FSI. With me today are Rich Keltner and Will Trout. Rich is Director of Product Management for Tegra118. Rich leads product strategy and feature design for Tegra118's Wealth Solutions and its integrated portfolio management applications, including its UMA solution. We also have Will, Head of Wealth Management at Celent. Will's research centers on technology strategies and innovation in the securities, wealth management, and banking industries. So with that, I will pass it over to Will.
Thank you, Christine. I'm excited to be here, and I'm going to go over today's agenda. We're going to define the UMA. We're going to talk about the trends that are driving UMA growth, the benefits of the Unified Managed Account. We'll review a couple technology case studies, and then talk about the future. Where is UMA headed? Finally, we'll conclude with a Q&A session.
All right, thanks, Will. I think before we really kind of dive into things too deep today, it always makes sense when we're talking about Unified Managed Account to really kind of just set the stage with what we're actually talking about. So what I wanted to do is just kind of talk about generally what is a Unified Managed Account, and more importantly, who are the various participants who are supporting these types of vehicles, and what is their unique role in making the Unified Managed Account really happen. So when I look at a UMA and kind of separate and distinct that from the other managed programs that are out there, a Unified Managed Account is an account where it's one custodial account that is partitioned into tranches, or what we like to call sleeves. And sleeves are part of that one unified account, but they are managed by independent parties. It could be SMA managers are providing models to get risk exposure for a particular sleeve. It could be a mutual fund to get a particular exposure, or it could be a sleeve in certain cases that is managed by an advisor. What's key to understanding a UMA and why they are different from the other managed programs that are out there is it is all within one custodial account. And shortly we're going to talk about the various advantages of the UMA relative to some of the other managed programs that are out there, but also kind of how this is positioning our industry as we're moving forward to address and adapt to the unique needs of the advisors and the financial clients that they have. So when we look at the actual roles and responsibility of who is participating in a UMA, there's really kind of 5 key participants that are involved in helping make these accounts happen. And I would say this as well, is that there are a lot of different variations of a UMA program and who is doing what. There are certain instances where a financial advisor may not only be presenting the UMA account to their client, but there may be instances where they are also participating in what we call the overlay role. And I'm going to describe that in just a second. But first and foremost, kind of going left to right here, the financial advisor is really at the forefront of a Unified Managed Account. They are participating as that primary liaison between the UMA and the end client for which it serves. They may be involved in helping identify the UMA as a viable solution for their client. They may be involved in helping select some of the underlying strategies and models that are going into it. So one thing that is universal about a UMA, it is the financial advisor that is at the forefront of offering that client that solution. Moving forward, the asset managers and the various strategists also play an integral role in the Unified Managed Account. Just as the title mentions, there are a variety of different sleeve opportunities that we have within a UMA, and asset managers are providing their models for the various risk exposures within the sleeve. So asset managers and strategists are essential to a Unified Managed Account, and also kind of represent one of the best advantages of the product. That is the ability to get independent third-party strategies and models within one custodial account. Moving into the center, it's really the overlay manager who acts kind of as an orchestra conductor, if I were to say. They're kind of central to the Unified Managed Account. They have visibility into all of the various sleeves that go into the account, and they perform a variety of roles, from helping kind of allocate various weightings to the underlying sleeves, to managing cash, to deciding when and if to make a change in terms of a sleeve as well. So there's a lot of different roles that an overlay manager performs for a UMA, but more importantly is just to think of them as kind of the orchid constructor that is overseeing the UMA relationship. Portfolio management and trading is certainly ubiquitous in all managed accounts, but it's also important within the UMA itself. These are the individuals that are making sure that when an account needs to be rebalanced, that it is getting rebalanced, but they're also involved in helping with the overall portfolio management. So when there are instructions coming in from an overlay manager or a financial advisor, it is the portfolio management and trading teams that are taking this on. Sometimes this role can be undertaken by a financial advisor who has discretion, but more often than not, this role is conducted in a centralized fashion within the broker-dealer. And then finally, home office administration, and this is really the catch-all for everything that is not accounted for in those first four areas of responsibility. And really, this is about helping with the account, whether it's the new opening of an account, whether it's handling of ongoing cash disbursements into the account or reconciliation. So the home office administration team is really responsible for making sure that the day-to-day operations of that account are reflective of what the financial advisor, the asset manager strategist, and the overlay managers are trying to do for that particular UMA.
Thank you, Rich. That was very eloquent. You've listed some of the key advantages and benefits of the UMA, and I'll try to provide a little context for your thoughts. You know, really, we've seen the tremendous growth of the UMA as a platform. The functionality offered by the UMA has always been evident and appealing to us, you know, industry experts, but it's really only the last decade that we've seen the kind of tremendous adoption that in fact, we've been predicting for some time. And that's for a number of reasons. The SMA is not going away, and I'd like your thoughts at some point too on you know, where the future of the SMA. But increasingly, we're seeing the SMA becoming part of the UMA platform. While the SMA was innovative in its time, it still offers a lot of advantages to the investor. The lack of coordination between accounts is something of an issue, and that's something that the UMA addresses. Also, the ability to better manage tax exposure. We talked a little bit about the overlay. So, you know, as you said, the UMA provides a single consolidated view of holdings. It's possible to use it to incorporate all different types of strategies, sleeves, model, and you know, as you mentioned, the overlay is in fact the control center, if you will. So a couple of things we've seen is becoming important. You know, the growth of the UMA is one thing, but that's also been fueled by some industry trends such as greater connectivity between sponsors, asset managers, and custodians. Also a shift in the way advisors are working with clients, and that's really, you know, the evolution of the advisor from sort of the back in the day, the stock picker, to a rep focused on asset allocation, to more of a holistic or investments planning approach, and that too has supported the growth of the UMA. Rich, did you want to provide some color?
Absolutely, and you know, we work with a lot of UMA sponsors as well as asset managers in the field today, and I think what's really interesting about this chart, because if you were to just look at the drop in the percentage of SMAs that are being used, you would think that the product itself was maybe losing some of its popularity, and the reality is that it's increasingly popular. And what's happening, and I know that this is accounted for in how it really measures these assets, is that what you're seeing is that the SMAs are actually being converted into the UMA accounts. So the asset managers who are providing SMAs are more important than ever, but what's happening is that they're moving into the UMA as really kind of that primary vehicle for delivery. So as we've kind of seen this shift in our industry towards moving towards model, more asset managers are moving towards models. Part of it is so that they can continue to gain access through the UMA container. So I think overall, you know, as Will said, the numbers are steadily increasing. We're expecting that to actually continue despite what we're seeing with COVID and some of the recent instability in the markets. And I think you're going to continue to see SMAs play a prominent role in the overall broader use of UMAs.
That's a great point, Rich, and I should underscore that growth of the different platforms, the UMA and SMA and other types of managed accounts, RPA and ETF advisory have not been uniform. So it'll be interesting to see where we are at the end of 2020. That's for sure.
Absolutely. Okay, so as Will was showing, if you look at the percentage of users of UMA, the assets that we're seeing kind of migrate into the unified managed account, we are certainly seeing an uptick over recent years, and we're actually expecting that to accelerate in the months and years ahead. But for a long time, we've actually been talking about the UMA. I can remember talking about UMA, we called it multiple strategy portfolios 15 years ago, and it took a while for this adoption and this kind of increase in usage to start occurring. And I think it's important to kind of understand why was that, and more importantly, kind of where things are going. And I think that if you look at what is required to offer a UMA, we talked about all the various people that need to participate in the creation of a UMA, from the financial advisor to the asset managers and the third-party strategists, overlay, the in-house administration, the portfolio management and trading. There's a lot of different people, different roles and personas who need to support a UMA to make it viable, to make it efficient, and to really ensure that it meets the needs of the clients who are utilizing it. And to be honest, the technology just wasn't really there yet. If you look at some of the programs that had early success, certainly in the wirehouse area, I think that they were able to offer a UMA sooner than their partners in the industry, their competitors, because they just had deep technology resources. They could build it in-house. But for most firms, that's really just not realistic. So I think that the industry has needed time to develop comparable capabilities for all of those various personas that I was talking about, but more importantly, kind of centralize how UMAs work to really kind of congeal the best practices around how best to offer these products. And only in recent years have we really seen the best practices for offering UMAs kind of mature a little bit, but also the technology to really get to a point where it's very complementary to all the various people who participate in a UMA and offering a UMA. The technology has certainly been one thing that's had to kind of evolve and mature to get us to a point where we're at today. But also there's been some other things that have been happening as well. Traditionally, the more affluent clientele that are out there, the way they've been able to get their various risk exposures is that they would have separately managed accounts, and they'd have a variety of those accounts to address the various risk exposures that they needed. The challenge for that, as Will kind of alluded to earlier, is that when you have a collection of SMAs or independent advisory products, there's no coordination. There's no transparency between those various products. You could have one manager that's selling you out of a position, just as another manager for another SMA that you may have maybe buying into it and creating tax consequences and just really kind of creating issues that better transparency would resolve. So we think everybody's been talking about kind of this migration towards transparency, towards consolidation of where you're getting advice. A lot of these kind of consumer tastes and changes are also driving increased interest in the UMA, and also an increasing use by sponsors and programs to use UMA as kind of that primary vehicle for offering managed programs to their clientele. In a couple of minutes, we're going to dive deeper into all of the advantages of the UMA and kind of the key and the distinctive features. But as we look to the future, and we're going to talk a little bit more about this as well, but if we look to the future, I think you're going to continue to see the sophistication of the UMA product evolve. You're going to see new types of assets incorporated into the UMA. But more importantly, I think we're going to make sure that the financial advisors that are offering this product are optimally positioned to offer this to their clients in a way that allows them to kind of focus on what they do best, but also using better technology, better workflows, better processes, so that they don't necessarily get bogged down by a lot of the administrative tasks that they have to do today because the technology just hasn't been there yet. So the future is very bright with UMAs for sure, and we're really excited about the prospects in the years ahead.
Well, Rich, you talked a lot about the different types of developments in the UMA and technology efficiencies, and it's been great to see that kind of adoption over the last decade or even longer. And certainly I think today advisors are able to articulate much more clearly the benefits of the UMA because it's not necessarily intuitive. There are a lot of advantages to the UMA. Another factor driving adoption have been secular trends that are transforming our industry on a broader scale. Certainly the shift to passive investing and sort of the outperformance of passive investing and adoption within UMA platforms, that has definitely fueled asset growth. I think for me, the most fundamental shift is the evolution of the advisor. I alluded to that a bit before, but sort of the requirements of goal-based investing have really challenged the advisor who's now looking for ways to leverage technology to provide strategic advice. So much more goals-based than certainly benchmark-based or otherwise. And so that advisor as strategist is really aligned to the benefits of the UMA, and that he can help his client capture advantages of scale, optimize taxes, coordinate different sleeves, and incorporate different types of investment models. And last but not least, there's regulation. We saw a couple of years ago the DOL rule, which has since been voided, really placing a spotlight on discipline and the way client investment accounts are managed. And that's being reiterated in a way with regulation best interest, which is about to be implemented end of this month. So, firms want a structure, an account structure that lends itself to both customization and scale, and the ability to monitor what's going on, exert control over operations and the product shelf is key. So these are some of the drivers that we have been seeing, and we believe will accelerate UMA growth going forward.
I agree with that. And one of the things I would say, certainly going back to talking about goals-based investing, there has been historically a bit of a conflict that we've seen between the home offices who are really looking for to curtail, minimize customization. They really want to kind of go and have a straightforward, really no modification approach to their products, but also advisors who really use portfolio management as a way of differentiating what they're offering to their clients. And this kind of falls into another, I think, unique advantage of UMA, is that it allows compromises where you could have a UMA account that had best of breed SMA and third-party strategists for some of the sleeves, but also allowing an advisor to manage a sleeve as well, to allow them to also participate in the portfolio management process on behalf of their client. So when I'm going out and I'm talking to a lot of our leading edge UMA sponsors, they're embracing this notion and really kind of bringing in this core satellite approach and allowing advisors to manage certain sleeves, and it really kind of it creates that kind of happy medium between really having an ability for advisors to customize solutions, but at the same time kind of having a very streamlined, mainstream, scalable process that benefits all. So yeah, good stuff.
So that would incorporate then Rep as PM, Rich, is that correct? Because we've actually, with some of this pending regulation, Reg BI, for example, we've seen adoption there too. But what I think is neat is that you can fit it nicely into your overall UMA platform.
Absolutely, absolutely. I mean, if you look at Rep as PM, what the sponsors are wanting to see, they want to see a high-quality investment management approach, one that uses models, one that uses rebalancing, really kind of driving better outcomes. And for Rep as PM, even if it's a single sleeve, UMA does offer a really kind of compelling, tangible alternative to the more historical way that Rep as PM has been done. So yeah, absolutely agree with that.
So part of the beauty of the UMA, as I see it, is the intrinsic appeal to the various actors who support it. So whether that's, the end investor or client, the sponsor, the asset manager, or the advisor, there's a range of benefits and opportunities there around the technology. So we've touched a bit, Rich, on the benefits to clients. I mean, clearly customization of the investments and customization based on the advisor's profile, but it can be, for example, the ability to build around legacy holdings or inherited stock. It can be ESG or SRI. Say I don't want to own a certain type of security. And tax, of course, is another huge one, which I would venture is becoming increasingly important for clients. Another fantastic benefit here, and this is not necessarily only existing within UMA, but it quite defines the platform, is this ability to access best-of-breed managers and open architecture. So you really don't have to bring all the intellectual capabilities, intellectual capital in-house as the wealth manager, or as an asset manager. You look outside to managers who specialize in a particular segment. And then rebalancing and the related reporting function translates into benefits for everyone, really, for the advisor, for the home office, and of course for the client. And we talked, a few years ago, everyone was talking about robo-advisors. Well, sort of this high-touch customer experience where you can kind of easily access reporting and metrics on your portfolio. You can even go deeper and get sort of portfolio attribution if you're an advisor and want to share that with the client. So there are all sorts of benefits. I think workflow is also critical, and I want to hear your take, Rich, on sort of how the sponsors are using this. But back in the day when you were talking, 10, 15 years ago, you'd have all these different accounts. Clients would receive different welcome kits. Now you've got a single account opening process and a single investment policy statement, and it's built right into the workflow. To me, that's a huge accomplishment.
Absolutely. If you look at all of the various kind of building blocks that you take us through for a UMA, there's so many moving pieces to this, all really adding a lot of value. But at the end of the day, keeping all of this straight without inundating the various participants in the UMA process, it's very complicated. And to your point, it's really technology and better design that's kind of leading the way. And from the sponsor's perspective, I think that they want to position those advisors to meet the needs of those clients, and it really make sure that the advisor has the tools that they need to succeed, that they're basically positioned to put their best foot forward with the client. But at the end of the day, also making sure that the recommendations that they're making, the portfolios that are being constructed, are tightly aligned with the needs of their clients. So we talked about it a little bit earlier, but in terms of home office controls, really what we mean there is that primary nerve center that a UMA advisor has to operate that UMA account and engage with their client. So within our platform, what we do is via a dashboard is that we work very tightly with the CRM that a sponsor may have, but use that as kind of that primary conduit that helps an advisor prioritize their tasks, focus on what they're going to be working on that day, but also make them aware of things that may be going on within their book of business. It could be large disbursements into an account. It could be a cash withdrawal request from an account as well. It could be accounts that need to be rebalanced, or a whole litany of other things that the advisor needs to know as they're managing that portfolio. And as we manage, there's Reg BI that's out there, and making sure that the recommendations that the advisor is making, the risks that they're suggesting that their client take, that they're living up to their fiduciary standards. So compliance and making sure that the financial advisor is making recommendations that are in line with the best interests of their client is also very, very important. And really and I'm going to talk about this a little bit more, but really it's technology that gives the advisors the ability to make sure that all of these various building blocks are correctly administered, but at the same time, letting them focus on the high value, high yield activities that only they are uniquely suited to provide.
So Rich, I think that's really important, and in my work I sort of often allude to the concept of a rules-based engine, sort of operating behind the scenes that can, for example, be really efficient in terms of suggesting or limiting even the type of account, an advisor can offer to the client based on that client's profile, and similarly help manage the product shelf. So at the end of the day, you're both compliant and you're able to offer best-of-breed solutions to your client in a highly efficient manner.
Absolutely. That's key to success. I mean, leveraging rules-based hierarchies, algorithms. Where we've seen that happen is that we have a client who's using our platform, and as assets come in to help fund the UMA, they put it into a transition sleeve, and they've developed capabilities that allow those assets to come in, and then using those rules to help kind of distribute those assets amongst the account. So, big picture, rules and algorithms really help with that scalability and also kind of minimize a lot of the distractions that, frankly, the technology has only recently evolved to the point to kind of minimize. Absolutely.
Because you want, at the end of the day, you want the advisor to focus on doing what he or she does best, right? And that's advice, client relationship, and client relationship development.
Above all else, absolutely. Okay. So as Will was just showing you, there's an array of building blocks that go into the UMA, all kind of requiring their own unique technology and innovation. And really, when all of these parts are working together in concert, that's really where the UMA really comes to life and really where it adds a lot of the value that we see within its potential. At Tegra118, when we're looking through our various technology enhancements on our roadmap and where we're looking to prioritize our development, we always go back to this original axiom, and we want to position all of our users so that they're doing what they do best, that they're focusing their day and their valuable time on the tasks and responsibilities that only they are uniquely suited for. Historically, when I talked about a lot of those technological impediments that we've seen historically with UMA, is because we didn't necessarily have technology that allowed the various users within the UMA to focus on what they do best. And recently, things have evolved to the point where anybody that's participating in that UMA account, from the financial advisor to the overlay manager to the portfolio management and trading, we're positioning them through our technology to really do what they do best, and then using automation, rules, and algorithms to really kind of take a lot of the work off of their plates that historically they've been tasked with. And ultimately, at the end of the day, what this does is it creates a lot of additional value. It creates scalability and improves the overall margins for the sponsors as well as the financial advisors that are offering the UMAs to their clients. So I want to take a moment just to kind of talk about a little bit more specifically, well, what do we mean by this, and how are we using our technology to make the lives of the various participants in UMA better? I think first and foremost, let's talk about the advisor, the front office. So as I mentioned, the advisor dashboard is that nerve center for UMA, but making sure that it presents highly relevant and actionable information is key to enabling it to do what it needs to do for advisors. So what we focus on when we're looking at our technology is to use that dashboard, use that CRM, and integrate it deeply with some of the adjacent applications so that it provides advisors with a near real-time view into their UMA portfolios and those actions that they need to take on behalf of their clientele. In addition to this, some of the other things that we've been doing is to give advisors information about their clients proactively so that when they are having an interaction with their customer, that it's relevant to that client. It could be something as simple as a birthday or an anniversary, or something as meaningful about industry news about a particular stock or company that they may work at. But giving advisors the ability to scalably offer more relevant conversations with their clients, giving them the information on that dashboard so that they can have a better interaction with their client, a more personalized experience, is also an area of high opportunity within our technology. And then finally, and I think that this is really important, and I can't overstate how important this is that traditionally there has been a challenge between connecting what's in a financial plan with the actual underlying portfolios that get recommended and ultimately implemented for a client. By taking and really kind of deeply connecting the financial plan with the underlying strategies that are going to go into that UMA, and then also making it a lot easier to implement that portfolio through single clicks, things of that nature, really kind of expediting that fulfillment is another huge area of opportunity through technology that is really adding a lot of value in the lives of our advisors who are using UMA today. But not to leave out the home office is just as vital in the overall UMA process as the advisors. And in a time of cost compression, where we're seeing a lot of growth in UMA, where growth is continued to expect to accelerate in the years ahead, we need to make sure that they have the tools that they need as well within the UMA stack. So streamlining, rebalancing, using rules for drift rebalancing to kind of expedite the fulfillment of trades. One button clicks from the advisor dashboard that enables them to do a trade within the home office is an area of opportunity. Looking to accelerate onboarding process. A lot of data is collected in the CRM during kind of that initial consultation between a financial advisor and their client. Instead of forcing somebody to double-click that information, put it into the system again, using new data standards, APIs, really new technologies to accelerate the onboarding of accounts so that you can manage by exception, but if an account is in good shape, you can go ahead and move it through to fulfillment. And then finally, using embedded compliance capabilities, especially in light of what's going on with Reg BI, to make sure that the securities and portfolios and the recommendations that advisors are making for their clients, that they are meeting the highest regulatory and compliance standard. So using automation to really kind of streamline that to, compliance is done in a much better way. And I think finally, and most importantly, is really kind of these things come together to elevate the overall client experience and the value that they're getting from the UMA. And we've talked about the unique capabilities and value of UMA, and one of those is the ability to incorporate best-of-breed managers and strategists for the various risk exposures that an advisor may recommend for their client, but do it in a way that's highly cost-effective, that is transparent, and minimizes a lot of the complications that you would have if these types of accounts were held separately. Will touched on it earlier, but tax efficiency, this is really becoming table stakes in the UMA. So if you're managing a non-qualified account on behalf of an individual, it is assumed that it will be done in a tax-efficient manner. And really kind of the structure of the UMA lends itself to that, but also utilizing capabilities such as replacement securities, embedded capabilities that prevent wash sale violations, deferring gains until they go long-term. There's a lot of capabilities within the UMA platform that we're using to really kind of take tax efficiency, automate that as much as we can, but still ensure that the recommendations are done from a tax-efficient sort of perspective. And then finally, we talked about kind of the challenges before UMA, where you'd have various custodial accounts, and all of the issues that come from lack of coordination with that. But having one UMA reduces custodial costs for a client. It's more cost efficient. It's more efficient for the sponsor as well as the advisor. And ultimately, this leads to a more satisfied client and higher asset growth as things move forward.
Yeah,
Will, any thoughts on this?
Yeah, for sure, Rich. I was going to say, I think the point about how the middle and back office workflow and automation drive the front office and indeed the home office experience is a great one, right? And so, there you're talking about sort of big enablers like RPA or cloud, but it's really about the flow of data through the organization from the front office to the back and then back to the front. And so you mentioned, for example, onboarding, right? I mean, onboarding is not just e-signature, it's a whole workflow that goes through KMC, that goes through the investment policy statement, the account opening and funding, et cetera. Being able to deliver that kind of streamlined workflow, at a highly efficient level, whether you're outsourcing part of it or doing it all in-house is really key. And that translates into a robust client experience and good data outputs as well for the home office, for the regulator, for whoever, and ultimately for the end client, whoever is looking at the type of service you're delivering as the sponsor.
Yeah, I couldn't agree more. And what's been kind of surprising for me too, things that I would have never dreamed could be automated or addressed through an algorithm or through AI, all of a sudden are becoming table stakes capabilities within the UMA. So it's really exciting. And one of the things I would love to see is look back at this presentation 5 years from now and see how far off we were in terms of the innovation that's possible. There's so many exciting things that I'm hearing about in terms of UMA technology. It's really going to be an exciting time for this product in the months and the years ahead.
Yeah, and I completely agree, and so much of it's going to be driven by data, right? Not just, trade execution related, but client-centric and the Internet of Things, what kind of information we're pulling in to better make that connection between, the big picture holistic planning component and the portfolio manufacturing and maintenance. So I know that's a theme near and dear to your heart as well. Would love your thoughts.
Yeah, absolutely. Okay. There's a lot of exciting things about the UMA, but when I'm out talking to our customers and our business partners, frequently the conversations evolve to, well, where is UMA going from here? And I think that just as we've really kind of reached a point where the technology is really starting to hum along with the UMA, I think looking forward, it's going to be a really exciting time for this product, and there's a lot of things are kind of converging to make it even better. And first and foremost, we talked a little bit about the value of task automation and reducing administrative friction. That's critical. I think that advisors increasingly, as time goes on, they're going to be compelled to really focus on what they do best, and that is providing advice, that is strategizing on how to best achieve the various goals for their clients. And really the only way they're going to do that is to be able to continue to focus on what they do best. And the way that they do that is through more automation for what they're doing. And I don't think that there's ever going to be an end state in terms of how do we allow advisors to get more efficiencies and more bandwidth. This is going to be a continual journey. But things that today may not even be conceivable as being automated, you'll be surprised. But a continued focus by the sponsors to give their advisors the time that they need to do what they do best through automation, that is going to continue to happen in the years ahead as it relates to UMA. When we went out and looked at kind of what's going on with the various sponsors that are out there who may not offer UMA today but are thinking about it, we went and we looked at Cerulli, and Cerulli kind of reports back that 90% of the sponsor programs out there right now have initiatives underway or planning initiatives this year to simplify their managed account platforms and ultimately probably move on to utilizing the UMA to support all of their managed programs. We're currently working with several clients within Tegra118 who are actively working on doing this to move to the UMA container for all of their managed programs. So we are fully expecting that these sponsor platform consolidations are going to continue in the years ahead, and if anything, we believe that they're going to accelerate. We believe that the REPIS PM, the SMA programs, that they are not going to go away. Just the way that they are administered is going to shift for a lot of programs. So those consolidations, we're certainly expecting those to continue. Another thing that we're seeing is the speed at which innovation is coming into UMA. It's dizzying. There are new capabilities in UMA that are being needed by advisors to do what they do best, but to also really kind of incorporate some things that we haven't seen in our industry before, utilizing data to better understand their client, but doing it in a novel and interesting way. So we are continuing to see what our clients need and the technology enhancements that they require to do their work. That work is accelerating. So the pace of change that we're going to see in UMA in terms of the capabilities is going to continue to speed up. A common question that I get in the field as well is, we have programs right now that want to bring in additional security types. So more than just equities and fixed income, we have UMA sponsors right now that want to bring in fee-based annuities. They want to incorporate structured products as well as potentially insurance vehicles. So looking to expand the types of securities that you can support within a UMA is another area where we're getting a lot of requests, frankly, from our clients, and I'm expecting to see that in the next several months. A lot of the tax consequences of UMA, a lot of the tax services that clients need that frankly have been the domain of institutional clients, we're starting to see those level of sophistication move into the UMA as well. So capabilities such as replacement securities and tertiary securities, automated handling of transactions to ensure that wash sales are not violated, bringing a lot of these kind of institutional caliber sophisticated tools into the UMA, but doing it in a way that's intuitive and easy for an advisor to implement. We're expecting to see those capabilities in the platform as well. Above all, we want to make sure that our platform allows advisors to consistently have a relevant interaction with their clients. And just as Netflix can anticipate what sort of TV shows you may want to use or may want to watch, the UMA is going to bring in capabilities that allow advisors to scalably personalize what they're doing. So somebody may be managing 800 clients, but at the end of the day, they'll be able to still touch the lives of those clients by having personalized interactions and really kind of utilizing data about that client to position that advisor to have a meaningful interaction with their client consistently as another area where I see a lot of innovation happening in the UMA. And I think ultimately, where is this all going? It culminates in better investing outcomes for clients. We want to make sure that at the end of the day that the UMA is offering a superior overall outcome for that client so that they can meet their various goals, whether it's retirement, funding a child's education, purchasing a home. But we believe that the superior capabilities of UMA will ultimately statistically lead to better overall investing outcomes, which is good for everybody. It's going to lead to higher asset retention, but ultimately at the end of the day, more value for all of those that are involved in servicing the UMA as well.